Hi everyone, welcome back to the USCPA classes for financial accounting and reporting. This is part 1 of trade receivable. Here I'll be covering in detail about account receivable and note receivable. So let's dive into part 1. So we have 4 parts covering entirely on trade receivable. So this is first part. Please go through the part 2, 3 and 4 as well. Let's dive into part 1 to understand account receivable and note receivable.
Now we are jumping onto the trade receivable. Trade receivable consider two things, account receivable as well as note receivable. So in this topic we'll be studying both account receivable as well as note receivable. What is trade receivable? It is a promise to pay and generally classified as a current asset. So in trade receivable, first we will be discussing account receivable. Account receivable are basically receivable only and only for the sales of goods and services. Right? What is trade receivable? The item, the amount which you are expected to be received in future on account of sale of goods, which is your main business, or the services, which is your main business. But other than anything else, if you have any amount receivable, that will not classify in the trade receivable. Trade receivable means main business. From main business, if you have any amount receivable or payable. In this, we'll be understanding 4 topics. First is discount. Discount can be sales discount, trade discount you might have heard of, or the cash discount. How to do the accounting treatment of the sales discount and trade discount. Second, we'll be understanding sales return and allowance. Third, we'll be understanding collectible accounts. And the fourth, we'll be understanding transfer of receivable. On the other side is the note receivable. Note receivable is basically a promissory note or a commercial paper kind of thing, which you have given, which you have received from third party, that you'll be collecting the amount against that note receivable in future. Right? It is a written promise to receive the cash in future date. Here we'll be understanding the discounting of note receivable. Right? That's another topic we'll be discussing. It can be employee advance or it can be promissory note or a commercial paper which you have received from the customer or any third party. So common topic between account receivable and note receivable is classification. When account receivable or not receivable need to be classified as a current asset and when it will be considered as a non-current assets. Right? When it is considered as a current assets, when it is received or receivable within
12 months.
12 month or operating cycle of the business.
Cycle.
Right. When it is received or receivable after 12 month or operating cycle, it is classified as a non-current. Next thing is impairment. What is impairment?
The sudden change in something basically. अगर impair कर रहे हैं, for example, अगर asset impair हो रही है, so sudden decline in the price fair value.
You know, impairment of trade receivable or impairment of note receivable in this context.
So impair हो गए, basically there are no chances of receiving any amount from your debtors. So you impair those balances.
Yeah, are you sure saying something?
सर मैं भी वही बोल रहा था, मैं भी थोड़ी इम्पेयरमेंट की डेफिनेशन ही बोल रहा था, बट अगर आप इस पॉइंट ऑफ व्यू से पूछ रहे हो अकाउंट रिसीवेबल, तो मोस्ट प्रोबेबली वही हो गया कि पैसा नहीं मिलेगा, उसकी वैल्यू खत्म हो गई है, तो basically
amount which you are expected to be received from the customer or to the third party, now it is in doubt or it's difficult to recover for maybe any specific circumstances. So that can be like on account of bankruptcy or maybe no intention of the receivable to pay well. So all those things you need to consider as an impairment of trade receivable, or you can say note receivable. These two are common topic for trade receivable as well as for the note receivable. How do you classify them in current and non-current? The same basis. How do you identify the impairment risk and the calculation of impairment loss? So these two things are common for both trade receivable as well as note receivable. So below is like trade receivable account. So I'm sure like in school days, you might have studied T account, right? This is very same account
Yes.
receivable, right? So what all comes in the debit side is your
The asset. That's it.
No, account receivable is an asset account. Yes, it is right. But when you are making a T account, what will be increasing the balance and what will be reducing the trade receivable balance? So
Sir,
your
any sales would be increasing the AR balance.
yes, your opening balance is credit sale, not the cash sale. Cash sale does not result into account receivable. So only the credit sale will be increasing. And what will be reducing the balance? If there is any provision for doubtful debt, right? If
Right.
AR is converted into notes, that means account receivable has converted into notes. That means it will reduce from AR and increase in note receivable. Third is cash collected. If you have already received any cash, that is also being reducing the AR balance. So opening balance plus credit sales minus provision for doubtful debt minus account receivable converted into notes minus cash collected will result into closing balance. Right? This formula you need to mug it up. This will definitely come in your exam, either in your MCQ or in simulation. So I can give you in writing, like there would be definitely a question on this in a different form, right?
Okay.
But principally, you should know what is how to make a T account for account receivable. There may be some time they will give you opening balance, cash collection, account receivable conversion, provision for doubtful debt, and ending balance, and ask you to calculate credit sale. Or they will give you all the information and ask you to calculate the ending balance, or they may give you all the information and ask you to calculate the provision for doubtful debt. So it can be in either ways,
Okay.
right? But definitely one question or multiple question you can expect from this concept in your exam,
Okay.
right?
Yeah.
For example, beginning balance of account receivable is $90,000. Credit sale is $800,000. Cash collected is $810,000. Provision for doubtful debt is $40,000. Calculate the closing balance of account receivable. What is the opening balance? 90,000. What you will be adding in it? Credit sale $800,000 minus provision for doubtful debt $40,000 minus cash collection $810,000. What will be the ending balance?
So 90 plus 8, 890. $50, 940 minus 9 minus 8. 90,000, sir.
90,000.
Yes, sir.
How you have calculated 90,000?
Debit add, debit minus.
Sorry.
Sir, debit the beginning balance था 90,000 plus 8 plus 50.
1 second.
50 क्यों कर रहे हो? वो तो end balance है.
90,000 plus
800,000, 890. Credit side को लिखना चाहिए.
minus
Minus 810. 40 as well. And minus 40. Minus 45.
how much is it?
10 plus 10 80 minus 40,000. 40,000, sir.
So $890,000 minus $850,000 is $40,000.
Yes, sir. Right side पे आएगा ना end balance. End balance, closing balance, right side पे आएगा ना?
Right?
Yes, sir.
Gurmeer?
Yes, sir. Yes, sir.
Sounds good?
Yeah.